We're actually seeing companies that historically, for example, only had relationship with China, reaching out to suppliers in Brazil, to suppliers in Israel, to suppliers in other countries, just to have a second line of defense should certain relationships break down.
Hello and welcome to this week's Tea Break. I'm Ali Al-Nazi, here with my co-host Yuri Bender. Joining us today is Polina Kurdyavko, Head of Emerging Markets Debt at RBC BlueBay Asset Management. Polina, thank you so much for joining us, and I have to start by asking, what tea have you gone for?
I have gone for a decaf oat latte.
So is that controversial? Does that mean you often make contrarian decisions in your research as well?
A balanced decision rather than controversial, because I did go for a coffee to get a kick, but it's a decaf version.
Right, true. I've gone for the green tea, Ali, inspired by the fascinating conversations we had about China last week at the FT Global Wealth Management Summit. And interestingly enough, there's some chief investment strategists at the likes of Lombard Odier, at HSBC, and they're all overweighting Chinese equities. And it's the technology revival that they're particularly interested in there, the big techs. You were in China recently, Polina. What were the trends there that really grabbed your attention?
You have a disconnect between the fundamentals and the performance of financial assets. Fundamentally, we think for the right reasons, China is not keen to stimulate. But from a financial assets perspective, the combination of the fact that you have rates very close to zero, you still have a closed capital account, and a wealth of Chinese domestic saving that is not earning much on their bank account, means that there are very few alternatives for investments. And that's one of the reasons why we're actually seeing outperformance of Chinese equity market. And we would expect that that's likely to continue.
Pauline, what we're seeing in a lot of our regular interviews with wealthy philanthropic families is that no matter how well a developing country such as China, India or Vietnam appears to be doing economically, there's still much poverty out there, which donors and impact investors want to help alleviate, I guess. As can be seen from our colleague Elisa's profile of Finland's Alstrom family. Polina, when is the point for you that an emerging market becomes a developed one?
You have to look at, firstly, the depth of the local market. Secondly, the liquidity available in the local market and the breadth of the instruments available in the market. And thirdly, and perhaps most importantly, the orthodox nature of the monetary and fiscal policy.
You've been looking at some of the less glamorous, less obvious emerging markets in Central and Eastern Europe, and you've looked at quite a few countries there. What trends have you been seeing there?
Well, Yuri, it's clear that technology and infrastructure are emerging as clear winners. Microsoft, Google and Amazon Web Services are expanding data centers and cloud capacity across Poland, the Czech Republic and Romania, and Chinese companies are investing heavily in electric vehicles and batteries. Is the story of China being the major investor in Central and Eastern Europe a long-term and sustainable one?
China is a major investor and likely to remain a major investor in most countries in the world, just due to the fact that they need to export some of their production and capital. But when it comes to the relationship between Central and Eastern Europe and China vis-à-vis other regions, I feel that we have other regions like Latin America, where at the moment we're seeing a lot more competition for cooperation and providing capital. In particular, US has made it very clear that they want to establish the dominance in their backyard. Whereas in Central and Eastern Europe, it feels to me that partnership between China and the region is less affected by other players, but is more affected by the economic drivers within the region. On one hand, China is a partner. On the other hand, China is a competitor. And so that dynamic will determine the future of the cooperation between the two regions.
There's a real realization in Ukraine that all of the components of this technology are actually made in China. And everybody's talking about a de-Sinification of the supply chain. how much are we relying on Chinese technology, bearing in mind that Russia still has quite an intricate relationship with Beijing in terms of trade. When we look at these supply chains, are investment strategists such as yourselves and the members of your team, do they now have to break down the whole supply chain and see who makes what, because the clients don't want to end up really on the wrong side of history or the investment story by evading any sanctions or lining the wrong people's pockets?
Firstly, there are strategic benefits from working with opposition parties, because that ensures that you can maintain relationship with both parties. Secondly, there are a lot of benefits in having a plan B, plan C, and plan D, having learned what we've went through this year. And what we're seeing is that we're actually seeing companies that historically, for example, only had relationship with China, reaching out to suppliers in Brazil, to suppliers in Israel, to suppliers in other countries, just to have a second line of defense should certain relationships break down, as you have mentioned. So that is the trend that we're seeing across most of our sectors.
Last week, I ran into a very interesting fellow, Andriy Dovbenko, who is founder and principal of the UK-Ukraine Tech Exchange. And he wrote for us recently an opinion piece about what he calls blended capital. And he was saying, to really invest in this defence innovation, we've got to bring in the state funds, the money from foundations, private banks, private capital, philanthropic capital as well, and combine it into a common goal to combat major global threats. And he was talking particularly about the Russian military attacking Ukraine. Is this trend likely to take off, this blended capital, Polina?
Even when we engage with public capital or multilateral institutions and try to provide a financing vehicle for emerging markets with private capital, that engagement takes 10 times longer than one could hope. To me, as appealing the idea is, I worry whether we'll be talking about this 20 years down the line and we still haven't made a big step in the right direction.
And Polina, you're also always looking for new approaches to investment, particularly in your own favoured sector of emerging market debt. And we're still talking about the excellent piece you wrote for us on frontier markets 3 years ago now, and hopefully you can write some more for us. But in particular, you were highlighting the financing issues facing the economies of sub-Saharan Africa and looking at how to avoid a crisis. Where are we today with these frontier markets, which you highlighted several years back?
On one hand, if we look at what investors would have liked to see versus what has been delivered, IMF, amongst other multilateral institutions, have delivered as much as they could to support more fragile economies over the last 2 decades. In fact, starting with a debt write-off for HIPC countries in order to support their economic path going forward. And yet here we are, 2 decades later, where half of those economies have had challenges servicing their debt. So to me, a very interesting debate is, are we looking at a different angle or at the wrong angle when we think about how we can best support those economies? And I do think that the focus next year will be on a lot more tailor-made financing, where you can be a lot more transparent on the use of proceeds, in particular for some of the ESG solutions that these countries need, in order to provide the support to those countries rather than usual budget financing, which has been the historical model.
So you're investing in some volatile countries, Polina, and in your spare time I hear you're an accomplished polo cross player. Is that just as dangerous as investing in some of these countries?
Even though polo players say that polo cross is polo for suiciders, I would like to argue differently. I do think that one famous person once said, in investing, what's comfortable is rarely profitable. And I could completely relate to that point, especially when we look at emerging markets.
It sounds, Ali, like we're safer on the football pitch.
Oh yeah, let's stick with football, Yuri. Polina, thank you so much for coming on.
It's such a pleasure. Thank you, guys.
That's all we have time for today. Don't forget you can watch all our episodes on the PWM website or the YouTube channel. And if you have any questions for our guests, we would love to hear from you. You'll find everything you need online. See you next week.